Trump accounts, 529s, and Roth IRAs. Today we're going to dig into some of the options for your kids. So before we jump into this, let's address the elephant in the room, and that is my forehead, and that is the mark on my forehead. Yes, I'm bringing attention to it because Matt doesn't want to do the work to edit it out, is what he just told me. So I hit my head in the dark trying to get up in the middle of the night. I apologize, you have to look at it. So as I said in the intro, today we're going to talk about 3 different options that are available to our kids, right? One of the topics that we plan for around the most is our family here at 10 Capital. And so we're going to dig into the Trump accounts, we're going to dig into 529s, and we're going to dig into Roth IRAs. Not all of these accounts are going to be applicable to you, but a lot of them are hot button kind of topics right now, or things that have had some legal changes, 529s with the Secure Act. And let's dig into them. So first off is the Trump accounts. This is going to be the newest one. It's coming available in July, or is available now, depending upon when this gets released. Right? The Trump accounts, what's really cool about these is they are going to be treated as a pre-tax asset, so kind of like that of a traditional IRA. The kid does not have to have earned income to contribute. It can be a custodial IRA, meaning the adult is in charge until the child is age 18. You don't get a write-off for contributions going in, but the kid doesn't have to have earned income either, like is typical of most IRAs. So you can put $5,000 per year into these kids' accounts. Again, don't get the write-off, but it's going to go pre-tax. They will track basis in it so that the basis, meaning the amount of money you've already put in, those contributions, won't be taxed again later on. Kids born within the last few years are automatically going to get $1,000 put in there, so they already get a little bit of a head start. Kind of a cool option for families now in a way to do a custodial account for a child, not have to deal with some of the administration issues that may come up with a trust, and not have to have the earned income to get it in there and still have it grow tax deferred. Big win. Go to trumpaccounts.gov if you want to see more information about that or how to enroll and sign up an account. That's not something that 10 Capital is going to be able to manage for you or do a whole lot around. Certainly something we could use in your financial planning for the benefit of your child. So next up, let's talk about 529s. I know a lot of people kind of had a hesitation around 529s. 529 is a college savings account. Right? It's just a section of the code, 529. A lot of the reason why people had hesitation is because, well, what if the kid didn't go to school, right? They changed some of that with both Secure Act 1.0 and then the passing of Secure Act 2.0 just a couple years ago. So 529 proceeds can now be used on K-12 education and some post-secondary like trade schools, college, but also remaining balances in a 529 up to $35,000 can be put into a Roth postgraduate, right? So if your child has a nice fat 529, they don't use all the money in the 529, there's proceeds left over, they can contribute up to the Roth IRA limits every year. So $7,500 right now. They can put $7,500, assuming they have those earnings, into a Roth IRA, which is a pretty big win. So you get tax deferred, and traditionally in the past, you would have been hit with a penalty and then ordinary income tax if you took it out for something other than college. Now, they have the option to every year max out a Roth IRA with that money. Pretty cool benefit that came with the passing of the Secure Act 2.0. But with the 529, right, the proceeds go in, you can make a contribution, it's considered a gift. You can super fund a 529, which means you can do 5 years of gifting, $19,500 in one, and fund that 529 when the child is born. Pretty cool benefit that a lot of people may or may not know about. It will grow in an age-based account, or you can go and select your own allocation. I always say these are kind of quasi-government because they're state-sponsored, right? So again, not something that 10 Capital will actively manage, but certainly an option available to you. The proceeds are going to go tax-deferred, and assuming that they are used on one of the qualifying expenses for school, they will be a tax-free distribution. So is a benefit from a tax growth perspective and a tax distribution perspective, not a write-off when you put it into the account. But nonetheless, still a pretty good option for those that have the desire to send their child to college or to sometimes a post-secondary education. The last thing that I want to touch on today is Roth IRAs, and specifically custodial Roth IRAs, right? So for children under the age of 18. Now, a couple caveats with this because the child still has to have some type of first income. If you're a business owner, you can put them on the payroll, make sure that they are doing something to justify the income, right? If you're self-employed, you can have them be an employee of the corporation. There are pros and cons from a tax perspective that you should consult with your CPA on, right? I'm not a CPA, I can't do that. But I will say they are a pretty cool tool to be able to get money into a kiddo's account, right? We've seen parents say, hey, you make $7,500, let's just say in earnings for the year, I am going to contribute $7,500 to your Roth IRA on your behalf. It's got to be 100%, right? So you can't have a kid make $4,000 and you put $4,500 in. They have to make the amount of money to be able to justify the contribution to the Roth IRA. Beauty of the Roth IRA is, again, it's an after-tax contribution, right? So again, no deduction for contributions that go in, but anything grows tax-free. So the $7,500 that goes in plus any growth for the duration of the account on that $7,500 is tax-free, right? When they're 73, 75, some of you watching this that are subject to RMDs right now, required minimum distributions, there is no RMDs, no required minimum distributions on Roths, which is a huge win and, right, a huge tax advantage. Especially when these kids are as young as they are. If you can get some money in a Roth IRA for them now because they have that earned income, it's going to be a massive win. You may be wondering which one of these makes the most sense for you and your family and your minor child, which is why we are here and why we have a job. So always happy to sit down and consult with you if you have any questions, be it on the Trump accounts, be it on a 529 or the Roth IRAs, or other options that are available to you and your minor children out there to help them get a leg up on their wealth building. And until next time, have a great weekend. I took a Beyblade to the forehead, man. It's like, it's not as cool as it sounds. It's not a top, it's a top. So.